This is Fintech Insider News. This week, Revolut hits 50 million users as it gains a new stock trading license. Online shoppers have been warned to be extra vigilant this Black Fraud Day. And the Chase UK credit card is here. We'll be discussing all of this and more on today's show, so don't go anywhere.
If you're in financial services and you're noticing that it's getting harder to acquire and retain customers, you need to know about Finimize. Finimize creates the world's most engaging finance content for retail investors, and you can now white label it for your platform. Get access to a library of over 20,000 news, analysis, and education pieces written by former Wall Street analysts with the retail investor in mind. Not only does the access via API or manual download mean simple, fast integration to your platform, but features like advanced tagging let you easily personalize it to your customers' portfolios and preferences. With content available in over 29 languages, it's never been easier to supercharge your brand with content that resonates globally. Find out how Finimize can grow your brand or elevate your content at finimize.com/business.
Hello and welcome to episode 917 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. I'm joined this week on Fintech Insider News by three fantastic guests who are here to break down the biggest stories from the past week in fintech and financial services. So first of all, a warm welcome back to the podcast for Veronica Glab, fractional consultant, ex-Innovate Finance. It's always great to have you on the show, Veronica. How have you been since you were last on the podcast?
I've been pretty good, pretty busy, and thanks for having me on the show, as always. So I am Veronica Glab. I'm ex-Innovate Finance and currently in Lisbon working as a fractional consultant. So I'm working with a couple early-stage startups on their go-to-market strategy and a stealth project in the community building space, getting together some founders and operators from LATAM, EMEA, and the US. So if there's anyone in the audience kind of works in those areas, shameless plug here, but slide into my LinkedIn DMs.
I'm already quite envious of you, and I'm wondering how many of our listeners are now hating you because you're in Lisbon, which is a wonderful place to be in the world, particularly this time of the year when then parts of Northern Europe and indeed Northern America start getting quite chilly. Lisbon's a very nice place to be.
I heard it's snowing in London.
It did snow briefly, but it's kind of more that sleety sort of wet stuff it's just grim. Anyway, people don't move to Britain for the weather. So next up, we have a Fintech Insider debut from someone who is experiencing the London weather, and it's joining me in the studio. Matt Ford, Chief Executive and co-founder of Sidekick. It's great to have you on the show, Matt. Can you tell our listeners a little bit about you and a little bit about Sidekick?
Sure. Yeah, thank you. Thank you very much for having me on. So yeah, I'm Matt. I'm one of the two co-founders of Sidekick, and we are a next-gen wealth manager. We're aiming to unlock the financial advantages of the ultra-wealthy. So think of us a bit like Coots and Monzo had a love child. We're trying to unlock all those kind of private wealth type services and open them up to a much broader audience.
I'm struggling with the concept of love children between institutions, but it's great to have you on the show. And we also have another Fintech Insider debut. So please join me in welcoming to the show Dave Excell, founder of Featurespace. Welcome, Dave. Could I ask you to tell our listeners who don't already know Featurespace a little bit about it and a little bit about why you started the company?
Well, thanks, Benjamin. It's fantastic to make my debut onto the podcast. So Featurespace, our mission is to make the world a safer place to transact. We've done this by building a platform, so a software platform that helps banks, credit unions, payment processors, merchants manage, identify, and detect fraud and also suspicious activity that could be potentially money laundering. We've done this by developing machine learning algorithms that can identify suspicious activity and prevent those transactions from taking place. And it got started from my passion to thinking about how can we use data and apply machine learning to understand the world around us, and in particular, how we interact with that world as people. And so from that, we were able to learn what does genuine, normal activity look like, which is perfect for then being able to identify when fraud takes place, because often it's not that genuine, normal activity.
I do love digital crime fighters. We need more digital crime fighters in the world. So delighted to have you on the show. Okay, well, we have a panel, so let's move on to the news. And our top story this week is that Revolut is launching stock trading with a new license at the same time that it's hit 50 million customers around the world. So this was reported in Bloomberg and various other places. So Revolut has finally secured a license from the UK's Financial Conduct Authority to offer trading services for UK and EU listed stocks and exchange-traded funds, with the service set to launch next year. The fintech giant will expand its trading capabilities, adding to its existing US stock trading options. This move strengthens Revolut's position in the competitive investing space, where it will go head-to-head with established players like Freetrade, AJ Bell, Trading 212 and Hargreaves Lansdown. The news coincides with Revolut announcing it has surpassed the 50 million customer milestone, with 10 million in the UK and another 40 million in other countries. To celebrate the milestone, this week Revolut will host an event called the Revolutionaries in London, with appearances from Stephen Bartlett and pop superstar Charlie XCX. So, Matt, let's come to you first, as someone who knows a little bit about wealth and trading and investing. What do you make of the announcement? Is this big news? Is this exciting? Is Revolut a potential big player in this space?
I mean, Revolut's a big player in whatever it does. And I think 50 million users is probably the main headline in that story, to be honest. But it's interesting. I was kind of reflecting on it. And in a way, like the fact that they've got a license actually isn't really that big a news in its own right. So they've been offering fractional stock trading, US stocks primarily to date. But they did it under this thing called a principal appointed rep setup, which was something that was really common about 5 years ago. That was how everybody did it in the UK, where it means you don't essentially need your own license. You can piggyback essentially on a regulatory umbrella. But the FCA has clamped down massively on this because oversight-wise, companies like Revolut have just ballooned far bigger than the principles that they were operating under. So it's kind of about time that they did have their own license. You know, there's been this massive shake-up of the principal AR setup for the last year and so, and most have gone direct. So I'm surprised it's taken so long, quite honestly. But
it took them a long time to get their banking license, didn't it? And that was probably the hold-up in getting the investing license as well, perhaps.
Possibly. I mean, like, yes, it is a complicated license to get, but this is not a banking license either. I think it's probably just because the setup was working really well for them before. You know, like they had less oversight, less regulation means you can move fast and there's a lot less regulatory capital. But I think it's an interesting story. It's not going to change the world. I mean, the fact that they've got their own license means they'll be able to roll out things like ISAs. I'm sure that'll be on the roadmap now. They'll be able to expand asset classes. So they were pretty stuck on DriveWealth, which is a US broker custodian. I think they'll probably now look at multiple ones. So it'll definitely broaden their offering, but it kind of puts them on par with probably where they should have been, rather than like this is going to fundamentally change the game. But as I say, I think the big news is actually 50 million users. You know, that is a phenomenal number for any financial services company. So broader product set, massive numbers. I mean, Revolut smashes it out the park in whatever it does. So I'm sure it's going to be a pretty healthy P&L line.
What do you think, Veronica? Do you agree with that assessment?
Yeah, I mean, certainly with many points I do. I think it's going to be really quite interesting because, as Matt said, you know, maybe Revolut haven't necessarily needed the license, but this does give them a lot more credibility to say, you know, they've got their banking license, they've got their investment license, and that for customers also means that it's it offers a certain layer of security. For Revolut, what that also means is I think there's going to be another push towards their IPO as well. It's kind of a big tick box exercise of saying, we've done the institutional thing, we've gone through these hurdles, we're in it to do things the right way. So it'll be very interesting to see what comes next.
And what do you think, Dave? I mean, it's obviously it's fantastic seeing the tremendous growth that Revolut has achieved, but can you end up growing too fast? I mean, we've seen sort of banks of all stripes, having certain problems here and there with sort of money laundering or this regulation or that regulation. Sometimes when you're growing really, really fast, it's hard to scale up your compliance, your fraud, all of those processes you need in place to protect customers. Is there a danger of growing too fast, or do you think this is just great news?
I think it's great news, but I think there's always a balance of how do you win more mind share of your customers and how do you create that loyalty so that they can continue to have that brand association. So for me, this is another indication of listening to customers and meeting them where they are to sort of increase that sort of share of wallet or share of attention. But like you do say, but going through the process of getting the appropriate licenses shows that they're looking to play well in the space and continue to do that in a safe and secure way.
One of the things I think is really interesting here is, that 50 million number, in European terms, that's huge. But if you look at some of the digital banks in China, they got to 100 million years ago. I think in Europe, sometimes we feel this sort of slight sense of inadequacy because we don't have the sort of super apps that emerged in Asia, partly because the European markets are very, very different. But Veronica, do you think, is Revolut on its way to becoming a European super app? Do customers want that, the one app that sort of manages everything in their financial lives or indeed their whole lives for them? Do you think, is Revolut on course to do that? Are they trying to do that? What's your take on Revolut and super apps?
Yeah, I mean, in terms of whether they're on that path, I'll say yes and no. So, I did write a piece saying that I did think they're going to be the West's first super app, but they're going about it in an interesting way by offering a suite of really diverse financial products and then lifestyle products on top of it. Whereas a lot of the super apps that we've seen in APAC have gone about really hyper practical features. So if you look at Grab and Gojek, you can use them for ride hailing, payments, going to the post office and doing your stamps, making your doctor's appointments, paying your phone bill. So really quite practical utilitarian things. Revolut have gone about this by really looking at as itself as a lifestyle app by integrating things like travel insurance, pet insurance, different investment products that are still hyper practical, but maybe not necessarily quite as universal. And part of that is also going to be because traditionally in the West, there's a lot of antitrust laws that will prevent a company from acquiring too many other different companies all under one. So Revolut, they do have these ambitions, but they've had to be very clever with their unique value proposition in how they integrate different features and how they really develop in-house rather than go about acquiring other companies. So, I did say that maybe like Uber and Uber Eats should be shaking in their boots, and maybe one day we will see grocery delivery on Revolut. But I do think their focus is going to be very much on that lifestyle. And then just to really sum that up is I think it's going to be by enhancing the financial products that they offer. So as Matt said, they do already offer fractional investment. I would also really like to see more educational content from them and even just more marketing on how great some of their features really are.
It'd be interesting to see a tie-up between sort of Revolut and Uber or someone like that, as you say. Maybe the route is a partnership. One of the things that I find so impressive about Revolut is the rate at which they bring in new products. Sometimes it seems to be a new thing every week, which certainly keeps the sort of media attention on them. Matt, how are they doing that? How are they sort of shipping incremental improvements so fast?
Ton of capital kind of helps. I mean, it is staggering the amount of money that they've raised. And it is interesting. I was talking about this with someone the other day saying that, could you build a Revolut today versus 5-10 years ago when they started out? Because to get one of these types of businesses off the ground, it takes hundreds and hundreds and hundreds of millions of pounds, and we're not in the euphoria days of 2020 2021 where SoftBank were coming and dropping hundreds of millions of pounds like the drop of a hat. But capital definitely helps. But it goes back to beyond capital. It goes back to just the attitude of that team and of that company from day one. I mean, I've been in and around fintech pretty much from the start, and Nikolai from day one was trying to build the biggest thing possible. And you could just see it. You could see that mentality of them shipping products, even when it was a tiny team, even before they got through their funding rounds. So I think they've created a DNA of just move as fast as you can. I mean, kind of touching back on the regulatory license piece, almost what is the fastest path to going improving something as fast as you possibly can in the most unregulated fashion at the beginning, prove that it works, and then eventually can get deeper and deeper. So they've just run really fast at the lightest way of getting there, throw a bunch of things at the wall, kill a bunch of things that haven't worked. And I think part of that is just a cultural setup that they've had from day one. But I mean, just to kind of wind back to the previous point of the super app, like, not to be too controversial, but I don't think it's even a super app. I think like super app is such like it was kind of quite a nice buzz term of a couple of years ago, but it kind of looks a lot like a bank. I mean, if you think, if you kind of think about what Barclays does and what all of these do, I mean, they also offer lifestyle services. They also offer lots of these types of things. So it's kind of just filling in its banking product set, isn't it?
But I think the point Veronica is making is there are things that you can do in China or you can do in Russia or whatever. There are adjacent services you can offer and you can integrate in a way that's more difficult in markets that maybe have slightly tighter sort of antitrust regulations and so on.
It is very cool. I will just say it's incredibly cool. I've used Grab actually and Gojek, and it is very cool to just see in one interface on a homepage 10 different options for what you're going to use. And it's like, I can hail a ride with a motorcycle and get myself to the grocery store, but I can also settle all of my errands, all of your life admin in just one app. That is a very cool feeling. And I was also very skeptical until actually I did have the opportunity to try out some of these apps, and you're like, wow. There's other places around the world that are absolutely living in 3024.
Dave, let's bring you in for the sort of final comment on this. Do you agree with Matt's analysis that the way Revolut has sort of pulled ahead of some of the other European digital banks like, I don't know, Starling or Bonk or so on, is just that pace of relentless pace of development? Or do you think there's sort of other factors in play?
Yeah, I think there has been a lot of development, and I guess that's come in some of its own risks in terms of some of the negative publicity about scams and fraud that can be associated with Revolut at the same time. So I think there's always that compromise between how fast do you grow and grow to that 50 million consumers versus are you doing that in a responsible way that sort of makes sure that you're protecting those customers when they are depositing their funds into those accounts. So it's always a balancing act to be able to get right. And I guess on the super app comment, it'll be maybe one day you'll be able to see how many steps you've made when you go in, and you can compare that to your bank account balance and maybe attract different rates of interest based on how active you are.
Do you think there's a correlation between how many steps someone does a day and how much their bank account balance grows? All right. Well, we will keep a close eye on Revolut, as we always do on this podcast. It'll be very interesting to see it as they sort of move into the United States and compete against potentially Nubank and so on. Can Revolut succeed in North America the way it has done in Europe? Okay, well, let's move on to our next story, which comes from The Guardian in the UK. Black Friday is turning into Black Fraud Day, says the UK's cybersecurity chief. Black Friday is just around the corner, which has highlighted that scammers are increasingly targeting deal hunters during the holiday shopping season. Fraud losses in the UK last Christmas topped £11.5 million, with many scams using artificial intelligence to create convincing fake listings for tech and fashion items on social media. Over 16,000 cases of online shopping fraud were reported in the UK last year, with an average loss of £695 per victim. As online shopping activity is set to increase around Black Friday, authorities are urging shoppers to use credit cards, enable two-step verification, and avoid clicking suspicious links to stay safe. Dave, as our fraud expert on the panel, is this a particularly worrying time of the year for people working in cybersecurity? Is it just inevitable that fraud will spike at certain times of the year?
Yeah, it is a time to be sort of very vigilant in terms of monitoring and understanding the behavior of people that are making those transactions and purchases. And both from two different perspectives is a lot of retailers will spend a large amount of money marketing during the Black Friday holiday period. And there's the retailers need to be able to show a return from that investment. It can be sometimes the most important points of their for their weeks in terms of their growth. And so when we're looking at fraud controls and prevention, we don't want to be preventing too much. We want to enable those sales to be successful for genuine customers. Whilst at the same time, we know the fraudsters will exploit that opportunity in terms of either using more traditional types of fraud in terms of compromised details that they have to be able to make purchases with stolen funds, stolen cards, stolen credentials. And now we are seeing the additional wave of the uptick of scams that also take place, playing on vulnerable shoppers that are desperate for the deal, looking to make ends meet over the holidays and still have gifts available for their family and their loved ones. So it's a challenging time of the year to look at all of the different threats and different aspects that need to be managed over the next couple of weeks.
Do you think people who are sort of either struggling financially or people who are just looking for a deal are just maybe just, I don't know, psychologically just that little bit more vulnerable to a fraud, a little bit more likely to just sort of believe that something isn't too good to be true?
I wouldn't say vulnerable. I think there may be just more, there's so much noise out there, and it's how do you look between that noise and really understand what is a deal that is genuine and the goods that I'm buying is going to be delivered versus something that, especially with a lot of the generative AI tools that are out there now, it becomes much easier for criminals to make something that looks a lot more believable and genuine. So being able to see between that with the advent of the deals are often have a time limit or there's a limited amount of stock. So it's all of these other messages that puts that time pressure back on and potentially making more impulsive decisions than what a purchaser may normally do.
One of the things we sometimes touch on this podcast is the sort of role of social media platforms sometimes in this, and social media platforms being abused. Veronica, do you see any role for sort of social media companies or indeed retailers in sort of helping to protect customers from some of these frauds?
Well, on the social media side, absolutely. If I'm not wrong, and you can fact check me on this, but I believe something like 80% of these scams originate on social media. And so, yeah, social media absolutely has a role to play as the origination, and they bear some of the burden of responsibility. These are massive companies that should have a better duty of care towards their own consumers who are engaging with those platforms. Not to mention that a lot of the main social media companies that are used worldwide, but in particular the UK, we're talking about Facebook, and Instagram and WhatsApp. These are massive corporations. They have a disproportionate financial advantage in being able to resolve consumer complaints. They've got a massive resource to secure some of their platforms and do that due diligence, or even just to enhance their own messaging to their end users about how they're engaging with these platforms safely. They have the technical tools, they have the finances to do it, oftentimes in a more agile way than a lot of, even fintech startups can, just because these companies are disproportionately larger. So yeah, that is to say, they absolutely do bear a burden of responsibility here, and it's a question of duty of care. What I would also like to see is, other platforms like Trustpilot or consumer awareness platforms really push their messaging towards consumers. They offer a great neutral platform, and I would also urge consumers, if they're going to make a purchase to any company, if they're going to make a purchase from them and you don't recognize the name of the brand, look them up on Trustpilot, look them up on Google, and look for peer reviews as well. Those resources are available and they are free.
That's a great tip. I understand it's International Fraud Awareness this week, which I have to admit I wasn't previously aware of. Matt, did you know it was International Fraud Awareness? Yeah. You did? Oh, you were ahead of me. It's not hard. Do you agree with Vanessa about the things sort of companies in the ecosystem can do to try and help educate and protect customers about fraud?
Oh, completely. We all have a role to play in it. One of the biggest challenges is that we ourselves are the ones. Well, the fraudsters are obviously the ones that are causing the trouble, but it's actually behaviorally, individually, that it's us that are falling for it. So, we are our own weakest point. It isn't necessarily AI hacking a particular thing or anything like that. It's the behavioral biases, and it's our own behavioral weaknesses. So, that is a really hard thing to overcome. So, I suppose from all different angles, there needs to be lots of support, I suppose, from all sides. I think social media is a really interesting one because, Veronica, you touched about trust and Trustpilot and those types of sources. One of the biggest challenges is that where people seek trust from has completely changed as well. So, in the old world, Trustpilot was the only place. Martin Lewis was kind of the place for finance if you wanted to get a recommendation. But increasingly with TikTok and influencers, like, people are trusting social media influencers as much as they are trusting established sources of credibility.
And some of them are more trustworthy than others.
Exactly. Yeah. So who do you trust? How do you trust? Is it about number of followers? Is it these are much more complex things to navigate. So going back to the social media responsibility, absolutely they do, because there are new sources of trust that are being built on their platform, and these platforms are enabling it. So yeah, I mean, completely agree that there's a role for everybody to play in all of this.
So Dave, what can fintechs be doing to sort of fight back? And I mean, I suppose there's the banks, sort of the fintech banks, and then there's all sorts of other fintechs. But what's the role of fintech in this? What can listeners to this podcast be doing? What do you think can be done?
Well, maybe just one point on the Meta and sort of Google examples is I do think they are starting to hear the noise, and they have started to enable fraud and scam reporting to come into their platforms from trusted sources. So I think then that helps them enable and identify when those scams are posted to be able to respond and take them down much faster. But to your point about what can fintechs do is I think it's to continue to innovate. I think it's identifying what are new ways, what are new tools that we can provide to consumers, and how do we actually change the behavior so that those tools get utilized. So I think one of the dangers is that we can innovate too much and end up confusing consumers about, well, what do I do when, and how do I use it, and how do I verify a transaction, or how do I verify if I am sending money to someone who I am purchasing from, are they really who they say they are? So I think it's helping to make that process much more simple. And I think that's often where fintechs have an advantage, is they focus a lot about user experience and how do we effectively change some of the user experience that we're thinking about from a banking perspective that we can bring into the day-to-day lives of making transactions and sort of working in that space.
Earlier this week, we saw the Australian government bringing in some sort of new rules about young people accessing social media to try and, increase protection for them. And, there's some controversy around it. But do you think, Dave, we might see governments taking action around online fraud and sort of maybe trying to bring in some more rules to try and force companies to do more to try and control fraud? I mean, I realize there's not companies sitting out there saying, "Yay, fraud!" But do you think we might see governments in Australia or elsewhere in the world bringing in some sort of tighter regulations?
I don't necessarily think it's tighter regulation. I think from where I sit and the conversations I am, there's a willingness for banks and social media and even telecommunications to do more and to do better. But sometimes it's actually the regulations and compliance that gets in the way of enabling them to be able to collaborate, to share information. So I think when we're looking at what is a strategy that works across those different industries, it's actually working with government and regulators about how do we enable that to take place. And once we can collect all of that source and evidence and information, how can it be proactively shared with law enforcement in the right way? So there's actually a bigger stick in terms of the criminals out there that are doing this that can lead to more arrests, and we can make it as a crime that doesn't pay. Because at the moment, I think if we look at the amount of money that's being stolen, it doesn't equate back in terms of what we're seeing in terms of arrests and sort of the work that could be done by law enforcement to stop the crime from taking place.
That's two really, really interesting points. I want to pick up on your first one, that point you made about sometimes the regulations are getting in the way. Do you mean things like the sort of, cartel rules that prevent banks from sort of talking to each other and sharing data and so on? Is that the sort of thing you mean, where there's a regulation that's actually preventing firms from cooperating to fight fraud?
Yeah, or even sharing like personal information about this is the account holder where money has gone to, and you want to verify, is that the right person? Or there's a phone number that created a scam, or that's where the original solicitation was. It's enabling that what is typically identified as PII or personally identifiable information. The ability to share that amongst organizations can often be challenging to do in the face of some of the regulation that's required, especially like items like GDPR can sometimes get in the way of those efforts.
There have been some pretty good regulatory changes though recently. The app-based fraud regs that have come in, definitely create the right incentive for people to act. Because I think, up until recently, I mean, if you look at a lot of the challenger banks, they've been doing phenomenally good jobs, I think, in some ways of features about, is this a real caller? They've been innovating with technology to try this. But the curse of being a modern digital challenger is often that you're also the first place that fraudsters try and run at, because they think that you've got weaker controls in different ways. So, they're probably having a disproportionate number of fraudsters trying to do things on a challenger bank, and they're trying to fight that. But now actually the real regulatory incentive is there as well, because, if people don't scrub up and if they really don't have the right walls, there's a really serious financial penalty now. Now it's covered up to, I think it's 85,000.
This story will run and run. Unfortunately, we're out of time on it. So we're going to take a very quick pause here, and we will be back very shortly.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up during inflation, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold!
Give it a try at mintmobile.com/switch.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See detail.
Before we get back into the news, we wanted to tell you about our latest Insights show. Recently, I was delighted to be joined by 3 financial crime experts, and I hasten to add they're crime fighters, not criminals, to discuss the current state of fraud in financial services and what fintechs are doing to fight back. We touched on fraud just now in the podcast, so if that got you interested and you'd like to have a deeper dive into the topic, then I really recommend that you tune into that episode. The pod is out now. Just head to the episode underneath this one to tune in. Okay, back to the news. Our next story came from Finextra and various other places, which is that Mama Money has launched a WhatsApp bank card in South Africa. So the South African fintech Mama Money Financial Services has launched a new bank card that enables cardholders to manage their account and money through WhatsApp. In collaboration with Access Bank and Pick n Pay, the Mama Money card aims to overcome the challenges faced by millions in South Africa, where there are many barriers to conventional banking services. Mama Money card customers can now easily manage their account via WhatsApp, buying airtime or electricity, depositing cash, checking account balances, and instantly freezing the card if it has been lost or stolen. Customers can also shop online or swipe in stores to buy goods, withdraw money from any ATM, and send money to over 70 countries worldwide using their card. So, maybe let's start with you, Dave. How interesting is something like this, offering a new way of banking to people in sort of lower income economies like sort of South Africa? Do you think something like this could make a big difference? Do you think working through WhatsApp is going to open up financial access?
I think making the financial services industry more available to like the underbanked population is extremely important. I think there's a lot of value in being able to interact with the financial system in ways that we probably all take for granted. So thinking of ways in which there is innovation to take place to enable that is really important. And we work quite closely with a number of institutions in South Africa, and it's great to see the ways in which they are looking to innovate and to provide those services to more people.
What do you think, Veronica? Do you think people will be happy sort of trusting WhatsApp to manage their banking?
I think yes. And, it's an unusual, maybe to us it sounds unusual because we're so used to having quite nice and shiny banking apps. But I think this is where you have to take a little bit of almost cultural sensitivity. In other markets outside of the UK, WhatsApp is absolutely an acceptable form of professional communication, whether it's to make a restaurant reservation or a doctor's appointment. And it's also, just more broadly, a form of communication. It can also be a lot faster as well, and it's already very well trusted in other markets outside of the UK. So it might sound unusual, but I think it's something that any of us could easily get used to. And certainly, probably people in those particular markets are already using WhatsApp quite frequently. And I think there's also something to be said for how WhatsApp can be used, particularly in places where maybe the internet connection is not that great to use a banking app, but it's good enough to pick up what messages. So if you think back, actually, some years ago, M-Pesa did something really similar, and other mobile money transfers and microfinancing fintechs. It's kind of OG fintech move in Africa, like 10 or 15 years ago, actually did this, where particularly in areas where there was not a lot of electricity penetration, but enough SMS signal, people were able to use these products to actually do money transfers by SMS. WhatsApp really is only slightly more sophisticated because really what do you need? It's like 3G network connection to be able to send a few messages. So that might not be good enough to use a sleek product like a Revolut, but for WhatsApp, it's good enough. And you can actually get really a lot done. So in terms of financial inclusion, this could be potentially quite disruptive.
Love it. What did you think, Matt?
I was also going to reference M-Pesa. I think it in its own right is not an original idea, but it's a perfect evolution of exactly what you need to do for the underbanked, which is be in the space and through channels and through modes that are much more accessible. And WhatsApp is huge, and it is widely used, and it is, as you say, low on data, much more accessible. You don't need the top end smartphones to be able to access it. So I think it's a great move. It's such a natural evolution of it. The trust point is an interesting one because I think Facebook, Meta, there are connotations, I suppose, in the West of use of data. It's scary, social media, but actually, I think less of a concern in other markets as well. So I think it's a great evolution rather than revolution.
What about the collaboration with Pick n Pay? So Pick n Pay is a sort of supermarket chain in South Africa. Dave, do you think that's a smart move as well? That partnering with a supermarket just actually is going to make it easier to reach out to sort of unbanked and underbanked people?
And I think it also helps to create trust. If there's brands that are associated with sort of a new style of payment or that element of accessibility and inclusive, the more familiarity, I think it would be more comfortable for them people to start to use, and also to use that initial adoption. It becomes a lot safer to make a small change in behavior and then grow from that going forward. If it's like where consumers potentially are using more cash to make purchases today, the next step of using payments or electronic payments is an easy progression to then get more comfortable going outside of more familiar retailers where they are shopping and purchasing today.
I love the fact that they're doing the sort of card issuing in store. So they're using the stores to issue the card. But to the point you were making, Matt and Veronica, about the sort of the following the sort of the path of M-Pesa, there's also a South African competitor called TimeBank that's been doing sort of exactly this kind of strategy. So I suppose the big question, Veronica, this may be a bit unfair because I don't know how well you know the South African fintech market. Do you think, can Mama Money come in and sort of displace a firm like TimeBank that's already been doing this quite successfully in South Africa? How do you come in if you're the second player into a market doing something? I suppose the WhatsApp thing is clever. Is that going to be enough, do you think, to differentiate? How do you differentiate as the second player coming in or third or fourth or fifth into a market?
Yeah, that's a very good question. I mean, certainly the WhatsApp integration is a really great idea, but I think also a lot of it is how you communicate with that market, establish trust, maybe even do a bit of guerrilla marketing. And, to make another industry reference, you think about the battle between Uber and Lyft. But they were actually, it's a fascinating story because they were aggressively competitive with each other. And it's really about messaging as well. First mover advantage is a big thing, but it's not everything. And it's how you communicate with your audience, how you establish that trust. Of course, how good is your tech stack? How appealing is your product? How easy is it to use? So it's a number of things. And, while I'm not, maybe not an expert on the South African fintech market, there are some principles there. But it does come down to how do you appeal to consumers and make sure that they trust you.
Matt, as a later entrant into the relatively crowded UK investing market, you must have some thoughts on how subsequent entrants can stand out and differentiate.
Oh, completely. I mean, if your product is significantly better, then you don't have to be the first. You've learned a lot of the painful lessons along the way, and I think Sidekick, the business that I founded, we've seen a lot of the problems that came with the first wave of wealth tech. We saw the business model problems that happened. They weren't able to charge very much with commodity products, so they were servicing the wrong end of the market. So we've been able to adapt and find our own space. So it's the same. It's a corporate strategy question. It's finding that space really where there is enough differentiation where you can carve out an interesting business. I think just going back to the specific example, it kind of reminded me of the printing of the cards in stores. That was a Metro Bank innovation.
You're right. Yes, in the UK, yeah.
It makes me laugh really that.
And water bowls for dogs as well.
Yeah. I mean, what happened to those? So banks being stores, it kind of all comes full circle.
But it's a good way of getting the cards out into customers' hands, and to the point Dave made it, creating more trust because there's a familiar retailer involved in that.
Oh, 100%. And I remember being blown away as well, like 10 years ago, being able to walk into a Metro Bank and walk out with a printed debit card.
I think that's because you're a fintech geek. No one else would have been excited by that.
It was a Sunday, and I think I had a consulting project on the Monday, so I was very, very happy.
Yeah.
And it stops the cards from being stolen in the post as well. So that's another advantage.
Very true.
That's facts.
I love that's the security head thinking. Yeah. Love that. All right. Thank you. That was a great discussion. Let's move on to our fourth story of the week, which is that UBS, Union Bank of Switzerland, has applied for a national bank license in the United States. So the banking giant is seeking approval to operate as a national bank in the US. Nearly half of UBS's wealth management revenue, its core business, is generated in the Americas. UBS oversees $2 trillion in client assets across North and South America. With a national bank license, regulated by the Office of the Comptroller of the Currency, or OCC, UBS would be able to accept demand deposits and offer additional credit products across the United States. So was anyone surprised that this was something UBS didn't already have? Veronica, did you think they had a banking license in the States? I kind of did.
I kind of did too. I totally did.
Is it? Do you think it's important for a wealth management player to have a banking license? Is that how important is that to UBS? Why do you think they're going to go through the effort of trying to get that license?
Well, I can chip in running a wealth manager.
Yeah.
I mean, you don't need a bank license to run a wealth manager. I think that's probably why it's taken them so long. If you think about what wealth management is, it's investing, it's looking at long-term assets. It isn't deposit taking and lending as the initial core piece of a business. But what we're seeing, and both at Sidekick and more broadly, is that the role of the wealth manager is getting broader and broader and broader. So we offer Lombard lending as an example. I'm sure UBS.
How many of our listeners do you think know what Lombard lending is?
It's a fintech podcast. It's a fintech podcast. Yeah, but so Lombard lending enables you to borrow against your investment portfolio. That's a pretty innovative step into the credit space. But generally, wealth managers don't do that much credit. So, I think this just shows that expansive role that wealth managers are taking. It isn't anymore just about managing portfolios. It is about providing really great savings products as well. Cash management is something we offer at Sidekick. It's something that UBS will be able to really maximize with a bank license, but also expand into lending products. So, things like mortgages where cost of capital is so important. Being able to take deposits at much lower rates, it's going to really start to enable them to do.
Of course, historically, the States had that division, that separation between banking and investing from the Glass-Steagall Act that was passed after the Wall Street crisis in 1933. You see that having a history degree is occasionally relevant. So, that's probably part of the reason why UBS maybe didn't have that license, was because they had originally gone into the States as a sort of broker-dealer, as a securities firm. Dave, I suppose this sets up the opportunity for sort of UBS to maybe diversify its revenues. Do you think this is a sort of big deal for UBS? Do you think we might start seeing UBS, I don't know, literally branching out, building branches in the States, trying to maybe appeal to a wider audience? Or do you think it's more maybe some of what Matt's saying is maybe they can just do some funky lending and some clever stuff that they can't do currently?
Yeah, well, again, it's a step in that direction. I guess they'll see how they can potentially upsell those more traditional banking products to their wealth management clientele. And I guess that will be their initial test into the market to see how successful that is, as well as at the same time building out all of the back office controls that are required, especially around areas of fraud prevention and money laundering that go alongside a lot of those more traditional checking and savings type products that run alongside that. And who knows, maybe in 10, 15 years, we'll see UBS branches like we see a Chase or a Wells Fargo or a Bank of America branch around town. It may be a step in that direction for them.
Veronica, do you think there's maybe a sort of youth angle to this, that not that many people are lucky enough to be sort of born wealthy, and a lot of people sort of accumulate wealth over time, and for Credit Suisse, trying to pick up customers who are maybe already wealthy, does a banking license sort of maybe enable them to perhaps start seeking customers a little bit earlier? Do you think that might be part of their thinking?
Potentially, yeah. So I did actually have a good think about this, and with respect to the youth part, it's we've been talking a lot in the industry about the great wealth transfer that is going to happen to the next generation, right? And so, if UBS were really looking at a younger generation, I think that would be very clever of them, because they're really trying to get ahead of perhaps what some of the other institutions are looking at. But I did also ask myself if they would be looking at specifically entrepreneurs, or doing what a lot of, or not a lot, but a few other asset managers are doing, which is looking at more diverse demographics. So particularly founders, but women founders of color, looking at really their diversifying their pool of consumers and users. So with a look towards the future. So I don't think it would just be youth. I think they're going to go about it quite a strategic way, and maybe go a little bit wider as well.
I like that point about diversification, because UBS has tried hard to sort of diversify its customer base, and is trying hard to appeal to many different segments of society in a way that not all banks and investment firms necessarily are. Matt, do you see any other advantages in a banking license, sort of beyond what we've talked about? Can you see any other advantages for UBS?
I mean, even so. Yes, it potentially opens up opportunities to broaden their product set, but it's just from looking at the bottom line, it's just going to really, really, really support that. So thinking about all the deposits that they're taking, if they can be taking those at
earning interest.
Yeah, exactly. So it's not something to be taken lightly, going and getting a banking license, and the cost and the overhead and the regulatory capital and all of that. But if you're at the scale of UBS, it's a real way of going and maximizing that bottom line. So I think it's a big play, but it could be really important.
So basically, what we're saying is we're all a bit surprised UBS didn't have it already. But having one is a win-win a huge win for UBS. I have to say, I do think the States seems to be the market in the world where it's hardest to get a banking license, which I think is why we've seen sort of banking as a service explode in the States, because it's so difficult to get a banking license. And, It's right that you don't want to just give anybody a banking license because bad things can happen when bad people run banks. But on the other hand, UBS, I mean, come on.
But there's a big difference as well because there's like nationwide licenses and then there's state-by-state licenses. I mean, there's crazy stories of like FTX buying a tiny bank that had about 3 employees in the middle of nowhere. So, it is a very, very different thing. But I agree, getting a nationwide charter is a very, very different thing from a more local one.
Okay, well, let's have a quick look at one more news story that we didn't have time to cover in full. So I'll just cover that in a news roundup, and then we'll move on to our final story of the week. So JP Morgan's Chase UK Bank has launched its first credit card. Chase UK initially offered only current accounts with a rewards program before adding savings and investment products. This week, it will begin offering a credit card to an initial pool of 25,000 British customers. The credit card will have a 0% interest rate on purchases and no foreign exchange or annual fees. Chase UK has 2 million customers and over £20 billion in deposits, and has also been boosted by the raise in the ring-fencing rule in the UK up to £35 billion in deposits. It's aiming for profitability in 2025. Although only officially announced this week, this news might not actually be news to regular Fintech Insider listeners, because we had Chase UK CEO Kuba on the show earlier this month, who gave us this exclusive.
The other thing we've talked about a fair bit on the show recently are rumours around your credit card offering. Are you able to tell us a bit more about that?
Well,
have you got one in your wallet?
I don't carry a wallet.
Oh, fair. I'll share.
Now, there's been folks saying we're testing a credit card. I can't comment on that, but maybe there are some employees that are doing something around using a different shade of blue when they shop. So that's obviously, again, coming from a towering strength of our credit card business in the US. That's obviously something we look at, and unsecured lending broadly is for sure an important direction for us. We are. It is not going to be, or at least for a while, we're not looking at a kind of Sapphire-like rewards-oriented card, which I know many of our commentators perhaps would expect. Right, our broad sense is we've met a slice of the reward-related needs with our debit card offering and a cashback on debit card. So for sure, the priority for us will be to uniquely focus on the borrowing need, right? So if there is a credit card coming anytime soon, that card likely would be a borrowing-oriented credit card rather than a sort of rewards credit card.
So if you want to listen to more from Kuba about the rise of Chase UK and its future plans, tune in to episode 912. We'll put a link in the show description. And finally, Atom Bank buys acres of new woodland in Northumberland to account for all its operational emissions since founding. Atom has bought 25 acres of newly planted broadleaf woodland in Northumberland in the north of England, as it aims to be climate positive by 2035, becoming the first UK bank to make this commitment. With current emissions from its operations, excluding financed emissions, measured at between 500 and 700 tonnes per year, the woodland, which was once a coal mine, will store 7,000 tonnes of carbon dioxide. This is an important first step to offset the impact of launching and scaling the Atom Bank business. Atom has committed to reducing the carbon emissions of its lending book, as well as reporting on its carbon emissions from its operations, and increasingly on the emissions related to its lending as well. So, good news story. What does everyone think about this? Dave, what do you think? Do we want to see more banks and more companies doing things like this?
I think it's the social responsibility thing for us all to be doing, especially to be accountable to the energy that we're using through the services that we provide to our customers, especially where there's a local link to the northeast of England. So hopefully it's something that we continue to see more banks to do, to invest back into their local community and create a better environment for us all to be living in. And hopefully this also goes a long way to promoting the brand for Atom, and they can continue to use that going forward.
What do you think, Veronica?
Yeah, I mean, look, Atom Bank are at They're very hard, sustainable business. They've been incredibly transparent on their own carbon emissions and carbon accounting. They publish regular reports on how they want to improve with really specific objectives that they set for themselves. So I'm not surprised that they've done this at all. And I think it's a really great tribute to the region that they come from as a business as well.
You similarly enthusiastic?
Yeah, how can it not be a good thing? I mean, tracking and monitoring it is one thing, but then actually going and acting on it is what it's all about. And you could just go and buy some carbon credits or, greenwash your way away to, the answer looking neutral, but actually putting your money where your mouth is and investing, as you say, also into the local area. Durham is an area I spent 3 years of my life as well when I was at university, and it's a beautiful area. So then building great employment opportunities and investing back environmentally is obviously a really great thing.
Particularly beautiful in the autumn, I always think. So Atom actually has a director of ESG sort of working on projects like this. Do we think we'll see other banks, other companies following suit, doing things like this? Dave, Veronica, are we seeing other firms doing this kind of thing?
I mean, I think it'll be certainly really tough because I actually did a little bit of a Google search on, let's look at the practical scale of, what are Atom Bank's emissions, those 500 to 700 tons, where this carbon sequestering project will offset that by, I don't want to say offset, but it'll certainly, put them into the green by a mile, right? But if you compare 700 or even 7,000 tons, compare that to Barclays, who in 2022 reported over 458,000 tons of carbon emissions. And, and I don't want to make a slight on other neobanks in the UK, but Atom Bank has significantly smaller carbon emissions than they do. So it would be excellent to see other banks and neobanks follow suit, because if Atom Bank can do it and sort of offset their own carbon emissions by so much, they're showing that it can be done. So maybe we should be taking some of these other comparators to task.
Yeah, especially having the role and the focus on that as something to make a difference in the local community and environment, I think is particularly important. So maybe not in the same way, but looking at other avenues to offset emissions is really important.
Yeah, absolutely.
So just for fun, what role do we think should exist at a bank that doesn't already? And that's a really hard question. Who has an answer for that? Has anyone got a good answer for a role that should exist at a bank that doesn't exist already?
Office dog procurer.
Oh, I like that. Yeah.
Selfishly, right?
I think you need a chief morale officer. You need somebody whose job is to make everyone else smile. A bit like you had a sort of court jester in the past. You need I know some companies have one, but it's not an official role. I think you need somebody who just makes everyone else smile and laugh. And maybe that is just dogs.
That is the dog often.
It could be a dog. Exactly. Just hire a dog.
Dave, do you have any sort of wacky roles at Featurespace that other companies should adopt?
Oh, I think one of them is, I think whenever you're discussing a new idea, there's always 100 reasons why it can't be done. So having that one person, which is, this is why we can innovate and we can implement that new idea, I think that's a role that every organization should have.
I love that. Any last thoughts, Matt?
I mean, it's more of a serious solution, but I love it when you hear of companies actually put a customer on the board. And I love it when you hear of things like that. So rather than it all being like, not hearsay, but, like best efforts of customer champion or chief customer officer, actually just put the customer in there and actually have the real voice there.
Do you think it's the customer who's constantly complaining? And they're like, okay, let's just put her on the board, and the board can deal with them.
And then give them the dog and they'll be fine.
Give them I'm liking the dogs and cats, but there's probably some cat listeners on there. This thing, we need cats in the office. Can you have dogs and cats in an office? All right. Well, you can write in.
The big topic of the day.
Yeah. Okay. Well, that wraps up this week's Fintech Insider News. Thank you so much to my three guests. You've been absolutely fantastic. Where can people find out a little bit more about you and about your companies? Veronica, where can people find out a little bit more about you?
You can find me on LinkedIn at Veronica Maria Glab.
And Dave, where can people find out a bit more about you?
So LinkedIn as well, and our website at featurespace.com. And also, I just wanted to plug is that we're actually launching our own podcast, a series on scam detectors. So that should be launched tomorrow and should be available on everyone's favorite podcast application.
I love it. My wife is addicted to that BBC one about the sort of scam interceptors. So I think she'll be listening. Matt, how about you? Where can people find out more about you?
Yeah, you can find out more about Sidekick by going to sidekickmoney.com or just searching in the App Store for Sidekick Money.
Fantastic. And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out about the work the team are up to at 11fs.com. Thank you all so much for listening. If you like what you've heard, please do follow our podcast, tell your friends about it. If you want to help us make a better show, please fill in our listener survey right now at 11fs.com/survey. If you want to join the conversation, seek us out on social media. Look for 11fs or Fintech Insider, or you can email us at podcasts@11fs.com. And if, like us, you've also said goodbye to Twitter X, why not join our new WhatsApp community channel where you can get the inside track on all of our content. Just get involved via the link in the description below. So thank you so much again to my guests, and goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.